Hindalco industry posted an 18% year-on-year drop in profit for the March quarter and still managed to beat the street estimate. ET Now's Mobina Kapasi caught up with Managing Director Satish to talk more about the company's quarterly performance. Listen in.
In FY19, the biggest story for us was the big rise in input cost of coal, of the carbon products, as well as furnace oil and caustic. So all these had a big impact in FY19. What I'm happy to say is that in Q4, especially when we reach February, March, we have seen prices easing. So, for example, Q3 to Q4, our cost of production was flat. But from March onwards, so we are guiding that in Q1, the cost of production will be 3% lower. So we are actually seeing some of the input costs slow down, which we think is going to be beneficial for us going forward.
There was margin compression, no doubt, and I appreciate my deep dive straight away into the numbers. But there was compression in the margins, no doubt, but it wasn't as bad. Would you say that the LME management on Hindalco's part is something that has played a role in sort of capping the margin compression?
What benefits Hindalco in these times of when LME goes down is twofold. One, we have a diversified business model because 25% of our aluminium we sell as downstream value-added products. So that gives us a benefit in times of lower LME because you get an additional EBITDA per ton from that. We have a chemical business where we sell specialty alumina and hydrates, which also gives us a benefit. And the third thing, we had 38% of our metal hedged. So all these three help to reduce the impact of the LME going down.
Now I'll just come to the capacity bit. I think for Hindalco, a majority of their capex is done. I think 2 years ago itself, a major chunk of the capex in Aditya and Mahan was done. In FY19, it was around 1295 KT of aluminium production. What is the utilization level right now when you talk about 1295 KT? And for FY20, what will you all do? Because as far as I understand, you don't have any more capex lined up, at least for aluminium.
So what we have been talking about for the last nearly year and a half is that the upstream, which is what you mentioned, the 1.259, that we are done with the upstream expansion, and that was where Aditya, Mahan and Utkal, which was nearly $5 billion, 30,000 crores of investment was done. Now we are starting on a new growth phase, which has got two legs to it. One is downstream aluminium and copper. We are today selling about 300 KT of the 1.295 million aluminium as value added. We want to double that to 600. We are selling today 245 KT of the 400 KT of copper as value added. We want to convert that to nearly 380, so nearly 90% is value added. So that is one leg of the investment. And the second is we are now seeing that the alumina market is so attractive. So we did a brownfield expansion of Utkal, which is going to complete. And we may think of even expanding more because we think that that is a lucrative market. So our next phase of growth is already on the works, and that's downstream and alumina.
Doubling the downstream capacity of aluminium. So by when will that be able to come on stream?
So if you see FY19 to FY18, we already increased 5%. So this is, the downstream expansion is going to be modular. Okay. So over the next 3 to 5 years, you will see steadily us increasing our downstream capacities, as well as going into higher value-added products. So both we are going to try to do. Our goal is to get an additional $150 per ton of EBITDA from this 600 KT on top of the metal EBITDA that you get.
Okay, all right.
So the important part why we are doing this is that we want that majority of the Hindalco revenue actually is not affected by LME.
I want to talk about Novelis. I think the results again have been flying high. Would you say that this is also on account of the fact that Novelis is already doing what you're trying to do in Hindalco, the fact that it is into automotive, into cans, etc. Do you believe that the fact that Novelis has more focus on downstream, that is giving it a leg up?
See, Novelis was a downstream company that we acquired. And what Novelis has done very well is that it moved from just can and lower end specialties. They were the market leaders of getting into auto sheet. So Novelis has benefited because now it has a portfolio of very high-end FRP of can and auto, which drives the $418 EBITDA per ton. As full owners of Novelis, in Hindalco, we want to take the benefit of the technology and expertise that's there in Novelis to bring that same downstream business model into India. So in India, we started with very low-end products over the last few years, we have now been using Novelis's expertise and training, getting our people, we send them to their plants for training, because we are actually building another Novelis in India.
You know, currently LME aluminium prices at around 1860. I mean, it's been quite a drop from $2,400–$2,500 that it was trading at earlier. And now, not only are we staring at the entire US-China rhetoric, but also the fact that world over agencies have cut their global growth targets. So I think that's also something that's put pressure on aluminium prices. Do you think that's going to continue going forward? I mean, what's the average range you see aluminium trade at?
See, the economies that matter for us from a consumption point of view are the US and China. The US economy has grown at the fastest rate of 3.2% if you saw the last quarter. Unemployment is at the all-time low. So the US economy is very strong, and Novelis, as a large part of the EBITDA is coming from the US. Brazil economy is also doing very well, which is very strong for us. So the only worry we have actually is China. China produces 50% of the aluminium and consumes 50% of the aluminium. So if the Chinese economy is closed down, then you're going to have the impact of a lower demand, which will then bring prices down, and also Chinese will try to import more. And that's why it is for us, if there's a big risk we talk about, it's the Chinese economy.
All right, there you have it. That's the management of Hindalco talking about their numbers. As of now, they're saying they're going to keep expanding the attractive alumina market. They have a diversified business model, and that's going to help them, during the lower LME. And as of now, they're guiding that cost of products will be around 3% lower in Q1. That's the stock price of Hindalco, 192% down in today's trading day.